Yes, Vishal bhai, go ahead.
Good morning. I to organize, as you can see, discuss about the non-tax reforms. Non-tax means the non-rate reforms, though we are going to discuss of the same. But we are going to discuss more about the other aspects of the reforms that have been announced and what could be the challenges or the nitty-gritties. I take this opportunity to welcome everyone who is present on this awesome Anant Chaturdasi, and we all are in a very joyous mood celebrating the 10 days of Ganpati festival in various parts of India. So this festival, some cheers, some fears to different business communities, some apprehensions, some speculations to various consumer groups, and I'm sure to various state government considering the impact of this on the exchequer. Now, before I go to some of the pointers, I request Avinash Bhaiya to give some opening remarks on his thoughts about the general aspects of the council meeting. Bhaiya, some opening remarks, then I'll go to pointers.
No, no, I'll
There are
suggest.
many speculations. There is a lot of buzz.
No, no, I'll suggest let us go to the pointers directly because I have very negative comments to make. So I'll make as and when the pointers will come.
Okay, I think your comments are not negative. I think your comments are different from what people are percolating this scheme to be. And in fact, that is what is the very purpose, because many other videos or the other webinars that we all have seen in past 2 days are only speaking on one side. And that is why I thought that we have this webinar from a critical point of view. I should not use the word negative. I'm saying critical point of view so that people get that particular angle also. And that is why I thought that if you could give opening remarks, it could set a tone for everyone to understand the pointers. So if you could give just general some remarks at the start, then I'll set the tone for it will set the tone for this program.
See, fine. See, what I personally believe is that this can be treated because this is, or rather, this was an announcement which was for the purpose of giving a benefit or passing on a benefit to the end customer. Because finally, GST is an act, GST is a law or the tax which is imposed on the pocket or hitting the pocket of the consumer or the end user. So the benefits, as it was announced, seems to be that there are a lot of benefits which are going to come to the end user. Question is how those benefits are going to be passed on, whether that is going to be passed on or it is going to be pocketed. Any benefit, if there is, whether it is going to be pocketed by the manufacturers or the traders or the distributors. At the same time, what about the accumulated balances of the compensation cess that has been removed now or that is proposed to be removed? Really, whether the cars are going to be uh, less costlier or the prices will be slashed or reduced, or it is merely an eyewash. So a lot of such issues are there to be addressed. At the same time, the government needs to be like very vigilant so far as the training of their officers are concerned, so far as the training of the taxpayers are concerned, when it comes to the change in rate and the applicability of those changes on the transactions which are being entered into. Maybe section 14, which is very relevant, must be taught with examples. There should be flyers for a normal consumer. I have my own reservation when it comes to the MRP products or FMCG products. What will happen to those products? So these are some of the issues that I would wish that whenever the pointers are there, I'll add my inputs to it. So please go ahead with the pointers.
Okay. So I'll first I'm opening parallelly the press release also so that some pointers we can take up. So the most big buzz, I think, from the taxpayer side, those who are having many cases pending in litigation, is the announcement, I should say, if it can be called so, of the operationalization of the GSTAT. Now, this press release para 2 says that the hearings would commence from the end of December, and the council has recommended the date of 30th of June 2026 as the limitation for filing of backlog appeals, and also most important that it would be made operational for accepting appeals before the end of September. They have not mentioned the year. I'm presuming it has to be end of September 2025. And further, they are saying will commence hearing by end of December. So I'm assuming it is end of December 2025. But frankly, bhaiya, I find this slightly difficult considering the present status of the formation of the benches, the present status of the appointment, and most striking thing is that many cases we do not even know where the tribunal bench would be stationed. The physical venue is also, as far as update is concerned, what I speak to various friends from different parts, it is not yet announced. So considering this as the backdrop, what do you think that as you use the word eyewash, is this again another eyewash or just like in Hindi we say एक बार सांत्वना देना है कि हाँ भाई आ रहा है तो एक और डेट दे दिया है, so at least people will wait till that date and then something else will happen.
You are right to an extent, because I don't think that there is any preparation. See, they have announced the members, they have appointed the members, the notifications have come, but even the members are not aware. I may not name the couple of members to whom I have been discussing, but even those members are not aware. They will be joining in September. I think September or October first week is the date by which they have to leave their current occupations and they have to join the tribunal. But they are saying that they will be allowing the filings. Now, maybe they will be allowing it online. They might be having a portal which is working, or they might have tested it, and they will allow from September onwards. But even otherwise, as you rightly mentioned, that this is a quasi-judicial tribunal, it's a judicial proceedings, and therefore there has to be an establishment of registry. There has to be an establishment of courts. It's not a, like, they have not declared that tribunal is going to be only virtual. It is going to be on hybrid, and therefore filings also have to be hybrid. It can be filed electronically, like in double AR we are doing, or in various forums we are doing. We can file it online, but at the same time they will be asking for the physical copies. Even in NCLTs we file online. Even after it is online, even after it is there on their records, but if the hard copy does not reach, the bench does not take up the matter. So therefore, that mindset is still there, and I believe that tribunal will be no different than what NCLTs or ITATs or states are working today. So therefore, since it is an hybrid mode, we need to be aware about where the location of the benches would be, where the registry is going to be placed, how the filings will happen. Nothing has come, and today is, I think it is 6th September. So I don't think that it will start. Yes, electronic filing they may open it up, that you can file your this thing virtually, but at the same time, don't you think that there is a contrary statement in this line only? They say that they will be accepting the appeals from September. At the same time, they say that they will extend the limitation till 30th June 2026. Meaning thereby
Correct.
they have indicated indirectly that 30th June to 2026 तक आप फाइल कर सकते हो, शांति रखो, आपको कोई जल्दबाजी करने की जरूरत नहीं है. आई वुड पर्सनली टेक इन दिस वे कि 30 जून 2026 तक करिए, और जिसको बहुत ज़्यादा जल्दी है, we'll open it for them that they can file till September.
Correct.
Let's take it in this way. And then when the hearings will begin, that God knows.
Here, an important point, as you were mentioning about training. So you just gave a very important insight that many of the officers either are unaware or they are asked to leave their present preoccupation by the end of this month. Now, importantly, simply appointing them, I don't think would serve the purpose, as this is going to be the last fact-finding authority, plus it is a quasi-judicial authority. So don't you think it will be very relevant to provide them a in-depth training of the law, so that whenever the bench sits and whenever the bench is adjudicating any appeal matter, then the decisions would be more refined and not another version of the AAR what we have experienced in past 8 years.
Correct. See, at the same time, Vishal, what I know is that all the members who have been appointed are either advocates or they are
Yes,
the existing commissioners or some of the officers who are working in the department. So they need to be trained because, see, I personally believe that when they are sitting on a bench to adjudicate a particular issue, they have to be unbiased. And when we are working for a department for 30 years, I'm not saying that they are not going to be unbiased, but this is what can be the common belief. If they are working for a department, if I am working as a taxpayer counsel for 30 years, I have a mindset of challenging whatever is there. Similarly, when an officer is working for 30 years, or more than that, or less than that, for the department, then they have a mindset that they have to augment the revenue. So to change that mindset and to bring into an unbiased mindset requires a training, requires a shift from the mindset which cannot happen, which may not happen in a week's time, in a fortnight time, or in a month's time. It will take time because it's a accumulation of 30 years of experience. So I personally have that feeling also that training, yes, you are very true, very right, that the training and rigorous training is required. At the same time, the practical experiences are also required. So uh, I don't understand how that is going to be done, or what is the preparation of the government. Let us presume that it is going to be an unbiased bench.
yeah, and not an extension of the AAR.
Extension of double
That
AR,
is
you are right. See, there is a big problem when it comes to double AR because double AR are the officers who are actually working in the department. So they cannot go against the revenue
yes.
most of the times unless it is very apparent or unless it is covered by a judgment or something of that sort. Otherwise, they are going to decide in favor of the department. So similarly, the triple AR also. I don't think that is going to happen
Hmm,
in tribunal. But yes, you are right. Since they are working or since they have worked for the department for a longer duration, it can be a difficult task for them to come out of that feeling of the revenue protection and being unbiased to the taxpayer and the tax authorities both, because now they have to be unbiased to both.
hmm,
They cannot tilt towards one. That is what
correct.
I personally believe.
Hmm, right, right. Moving ahead, I'll just take in brief some measures which have been recommended for facilitation of trade. So first is sanction of risk-based provisional refund to facilitate refund claims on account of zero-rated supply, where the council has proposed that there would be an amendment carried out in Rule 91 to provide for sanction of 90% of refund claim on provisional basis. Now, as far as I understand, a similar provision already exists. Similar thing they have mentioned for provisional based refund for inverted duty structure, and also lowering the limit so that low value consignments which are presently barred by 5414 to get the refund. Now, when I talk about the first two proposals, where they are saying that 90% of the refund claim would be sanctioned on provisional basis and only based on risk evaluation by the system, they some of the applications in detail. But I believe that I don't know how this will actually operationalize. If it does, then it should be great because as we see, uh, these two issues are a very big pain point for the industry. Despite of engaging in zero rated supply, which is eligible for refund, or being uh, impacted by the inversion rate structure in many industries, they are not able to encash the ITC, which otherwise is allowed by the law to be encashed in the form of refunds. Now, in these two proposals, they have proposed or recommended, I should say, that the refund would be sanctioned 90% upfront. I seriously doubt this because, again, it is having a rider which says on the basis of identification and evaluation of risk by the system. So there is a very good possibility that the system may be giving red flags like how we find in case of risky export red flags. And then the refunds may not be so smooth as what has been at least announced. Your views, Bhaiya, on this?
See, first and foremost, they have proposed that they are going to amend or they are going to bring changes in 91.2. So rule 91.1 is going to remain unchanged. So the conditions is that if in 5 years they have been into any business or of hanky panky, or maybe they are arrested or some action has been taken against them, then their provisional refund clause will go. Secondly, 91.2 was already there, wherein it was said that there will be scrutiny done. Once the scrutiny is done and the officer is satisfied, then he will sanction that 90% within
90%.
7 days. That is what is the law all about. And now they have given a caveat again, wherein they are saying that recommended issuance of a notification to notify certain category of registered persons who may not be granted refund on provisional basis. So what I personally believe is, whenever you will put a caveat, whenever you create an exception, unfortunately or fortunately, that exception becomes the rule. So now they will doubt everything, because you might be aware that there is a concept of risky exporters. There are many exporters who are classified as a risky export by DGRM something. And then once that is classified, that DGRM is a body to whom nobody can contact, and therefore all the exporters, all those taxpayers are in air for year, 2 year, 2.5 years, 3 years, and then they say that there is no clearance from the DGRM, and since there is no clearance, we cannot sanction the refunds. So my say would be, so far as this zero rated supplies are concerned, that this rule was already there. Now they have taken an added
Exactly.
advantage, wherein now they will restrict it further. They will say that these are the exporters to whom, or these are the category of the persons to whom the refunds will not be given in the provisional manner. And therefore, you will have to go for the routine refund sanction process. So, which as per me is going to be, or rather it is going to be against section 54.6. Because 54.6, that subject to restrictions, it is already there, but restrictions means operational restrictions. You cannot have a restriction wherein you will notify that these will be the persons who will not be given. Again, a fight will start parallel to 9610. In 9610 also they have done the same thing. Now they are trying to propose the same thing again. See, when the law does not permit you to classify certain persons or to categorize certain persons, not to give them restriction, not to give them refund on provisional basis, I personally believe that you cannot have those benefits or have those notifications. Although the 54.6 has a provision which says that they can restrict or they can have certain restrictions. So, and so far as this integrated or inverted duty structure is concerned, Vishal bhai, you are aware how the department works, with due respect to them. Whatever comes, it says they will be given provisional refunds. You all are aware, all the participants are aware. I need not speak on that how they are going to give refunds of 90% on a provisional basis. Their demand is going to increase finally. अभी अगर वो एक X डिमांड रखते हैं, ऑब्लिगेशन रखते हैं, आई एम स्पीकिंग दिस ऑन द पब्लिक फोरम ओपनली, इफ दे एक्सपेक्ट नाउ X percentage, then they will be expecting X plus Y percentage for giving 90% of the provisional refund. That is going to happen now.
So basically, this is not actually a trade facilitation measure, at least as it has been recommended,
No,
or
government
as
has a
it
clear
can, as it.
intention. Government has a good intention of offering a trade facilitation measure of inverted duty structure, but implementation will be a problem. GST mein, Vishal, you are aware, GST is a good law. GST is for the benefit of the economy and the country. But the way it is implemented by the implementers or by the tax administrators, that has created the mess. At the same time, there is 1% or maybe less than 1% of those taxpayers who are fraudsters. Because of them, the entire GST has been a mess. Because of those implementers, because of those officers who are about to implement, or who were supposed to implement this law, and those 1% or less than 1% of those defaulters. Because of that, 90% of the 99% of the public is suffering.
True. Now, going ahead to one important thing. Now, this has been a very disputed provision, and I'm sure even till date, despite of having judgments, there is no clarity as to what exactly is place of supply in case of the intermediary services. Another dispute on this is that what will come under intermediary services and what will be normal business auxiliary service. That is another bigger dispute which is continuing since from the service tax era. Now, because of both these disputes, I believe this could be a favorable measure for the trade and industry, that now they are act by removing 13A, which deals with the place of supply provisions only with respect to intermediary. And when it comes to omission, then automatically it will fall in the default rule, which is 13.2. And I believe that would at least help the exporters. This may be contrary to the because now for importers, earlier where RCM was not applicable and people did not pay RCM, though there also there is a lot of by literally interpreting the RCM provisions of IGST and treating it as import of service without looking at the place of supply provisions. But technically it was not import of service because the counterproductive for the importers, import of service recipients, that for them now this will be a regularized import of service and they will have to pay tax under RCM. But for exporters, it could be a big relief where they were being saddled with the first question of whether CGST, SGST or IGST or whether not taxable. And the second challenge was whether what they are doing is intermediary or not. We can see multiple matters going across India on both these issues. I think that should be put to rest. Any comments by you, Bhaiya, on this?
No. It's a good
On
provision.
intermediary
No,
related recommendation?
it's a good provision as per me.
Okay. Should we take questions now?
Last में लेते हैं, I think.
Okay. Girish bhai, if it is okay, we can take the questions at the last. Now, this is going to be, again, if properly implemented and if properly drafted, this could be a very big relief because today these are the, I should say, trouble creating provisions under the law. Section 15, which deals with the valuation provisions, in which section 15.3 deals with exclusion. Just to give you a backdrop of this. Now 15.3, which provides for exclusion for discount. There are two categories. One is discount, which is allowed on or before supply. There are no conditions, but where a post-supply discount is allowed, there are multiple conditions being provided under section 15.3b of the CGST Act. And the very first condition under 15.3b is that the requirement to establish that there was a pre-agreement. Pre means before even the date of supply or at the time of supply, there was an understanding. Agreement is an understanding that there would be a post-supply discount. If this condition is not met, then any post-supply discount given will not be eligible for a deduction under 15.3. Now, this created a lot of problem because in many cases, now during the audits, the department is identifying that you have raised a credit note for this discount, but this discount is not an eligible exclusion because there is no agreement. Now, the problem is that the department is demanding for a written agreement. At some places, I have even heard that department is asking for a registered proper agreement on the bond paper, which specifically spells out that there would be a discount and even the rate or the range of discount. I personally understand that it is a very settled principle of contract law that agreement can even be an oral agreement. There is no necessity that there should be a written or a registered agreement to establish. So I personally believe this present litigation should be put to rest because of this particular amendment. That is the first part, 15.3b1, where they are proposing or recommending to omit the requirement of establishing the discount in terms of an agreement. Hence, if this is removed, then this could be a big relief and a big settlement of all these open disputes. Also, I personally believe that this will come with that famous as is where is phrase, so that even the past cases which are presently going on, maybe at the audit level or at the adjudication level, could be settled and put to rest. Second amendment proposed over here is the amendment in 15.3b to provide that discount should be granted through a credit note issued under 34 and to correspondingly amend section 34 to include a reference of 15.3b. So presently, section 34 is an independent section without having any cross reference to this section. Now they are proposing to bring this particular amendment so that there should be a reversal of input tax credit by the recipient in case where a post-sale discount is given and the value of supply is reduced through the GST credit note only. Now, why this particular issue is there? Because again, many times this post-supply discount is given in the next financial year, and at times even beyond the maximum time limit to issue a credit note. Hence, there was a circular which allowed the taxpayers to give a accounting credit note or a non-GST credit note. Now, this particular amendment could have an impact on that. Plus, they have also recommended to rescind circular 212/6 by 2024. We have Shefali ji also. I'll request Shefali ji to enlighten us on the proposals of this particular amendment, and then we can move on to Avinash Bhaiya's inputs. Yes, Shefali ji.
So, I think in this particular case, earlier also they wanted to tax the transactions, like some of the transactions, wherein some of the credit notes are issued for something which have been done by the recipient, that is the customer, on behalf of the supplier. So let us say if I achieved a particular sales target, so whether it's a discount, if any discount is offered for that, or by the stretch of imagination, they just want to convert it into a supply. So it may be a supply from my side because I'm achieving something for them, right? So I think around 2020, they also issued a circular wherein they said it will be taxable, but later on they rescinded that particular circular because they thought it will be a very litigative issue. But now maybe they just want to incorporate the same thing. So let us say there is a turnover and there is a turnover based discount. So if that is being reflected through a credit note, so in future they may say that this is like, instead of reducing your supply and asking them to reduce their input tax credit, it's better for them, the customer, to raise an invoice to you. And although the end impact may be similar in both of the situation, but instead of reducing your supply will be intact and that person will be raising an invoice. So in some scenarios, in some scenarios, it may even feel like there is a supply from the side of customer, because let us say I asked you to achieve, say, 1 lakh quantity of sales, right? Now to achieve that particular quantity, you are doing some kind of promotion also. So maybe you are putting some extra holdings in your city or nearby your shop area, or you are putting my particular goods on a specific place in your shop. So sometimes it may even look like it's a supply. So I think their purpose for amendment in this section is to bring those kind of transactions into ambit of supply. Although they tried it earlier, but they were unable to do it, so they rescinded it earlier. But now they are trying to incorporate that whole thing into the act itself.
I believe it would be the other way around. Like if you see point number 7.2 of the press release, they have said that they want to resolve the ambiguity. So I believe, in fact, this is another very litigative issue from the side of the recipient. See, 7.5 is from the side of the supplier.
Vishal, can we go back to the provision? 15.3b. So 15.3b was what will 15.3 is about what will be reduced from the consideration.
Yes.
Right. And in the B part, they have said that if there is any post-sale discount. So first part, I think, is for the pre-sales discount at the time of sales. And second part will be, second part is the post-sale discount. So now if they remove that entire part from there.
No, I don't think the entire part is removing. Their first recommendation at least is that they will be omitting only the requirement of clause 1, that there has to be a pre-agreement. This is the first recommendation. And second part, they are saying that now they will be linking 34 with 15.3b, which is not presently there. So that now it would be compulsory. I believe this is what is the intention, to compulsorily give a GST credit note for that. And then will come the next part of this, because the previous 7.1 is from the side of the supplier. Now 7.2 is from the side of the recipient, because as in your example, when you provide for that type of a discount, and let us say I achieve that turnover, and you are giving me a non-GST credit note. Presently, this is the practice because of that old circular, which allowed you to give accounting credit notes. Now the challenge is, or the practice is that I am receiving this independent, you can say, credit note, which I am reporting as an additional income generally in the next financial year, because by the time this particular discount and all is finalized, it is the next financial year. So I report it as a separate line item in my trading P&L credit side as a separate additional income. Now, the biggest litigation which is going on across India is that in the hands of the recipient, this particular discount is being treated as a taxable transaction. They are saying that you have made a separate supply. In some cases, the officers are saying you pay the tax at the same rate applicable to the goods. Whereas in some case, some places they are saying that no, you have to pay 18% because it is like a new service given by you to the dealer. So this is what I think will be addressed in 7.2, whereby they are proposing to remove the ambiguity and legal disputes with respect to this. What? Non-reversal of ITC. Now there are two challenges. One, they are saying either treat this as a separate supply made by this dealer to the manufacturer, or reverse the ITC which you have availed in the first place on the original invoice, because original invoice was of 100 and now you have received this credit note of 10 rupees, which is a non GST credit note, but still they are asking you to reverse. So now they have recommended that circular would be issued, which will be clarifying on these issues. One, non-reversal of ITC on account of post-sale discount through financial credit note, that is non-GST credit note. Second, treatment of this post-sale discount provided by the manufacturer to dealer, whether this is any additional consideration, so whether there has to be any tax or not. And second, treatment of post-sale discount as consideration, lieu of promotional activities, etc., performed by the dealer. Like you were saying that if the dealer has done some extra, taken extra efforts by putting some hoarding or organizing some special event, and that has promoted the sale, and let us say the manufacturer is reimbursing the dealer by giving a post-sale discount. So they are classifying the post-sale discount into two categories. One is the turnover-based discount, which you have earned because of achieving the turnover. Second, where you have done some extra promotional activities and now you are getting it reimbursed in the form of discount. So all these are the present persistent issues for which now there would be a circular. Now we'll have to see what the circular would be, because this particular point is not specifying whether they will make it taxable or non-taxable. I personally believe that if I go by the present position, any discount which I am reporting and which has come to me by way of a financial credit note because of achieving a particular turnover, I believe there is no supply involved in that. I did that additional effort. I achieved that target for my own benefit. I did not do it for the benefit of the manufacturer. So if the manufacturer is giving me that discount, which is many times also recorded or reported as incentive, that is not a separate supply done by me to the manufacturer. I took the extra effort many times. In fact, what these dealers do, as you would be knowing, they purchase the material from the manufacturer. They may be selling it later. Why they purchase it? Because they want to fit into the bracket of that particular target. So when this month end or quarter end or year end comes, they simply place the order so that at least that much quantity is booked in their name and they become entitled to that additional discount. Now, in this particular case, market, but they place the order with the manufacturer so that they qualify for that lower discount. Now, in such cases, I believe that the present matters which are going on demanding, one, either the dealer to reverse the ITC or asking them to treat it as a separate supply, I believe both are not in accordance with law. And I just hope that this circular clarifies it in the same line and not otherwise, that it is taxable. If that the circular is doing, then it will create another big litigation matter and maybe another good case for it. Your views on this, madam, and then we can go to Avinash Bhaiya.
We are talking about clarification, but not about relief. So when the circular will come and the proposed amendment in section 15, so I'm not at this point of time, I'm not clear whether they are going to remove only that linking part or if they are going to remove that whole entry. If they are removing that particular entry from their post-sale discount, and then in the circulars, instead of favoring the assessee, they are, I mean, in the circular they are declaring it as a supply. So in that case, I think that will be a risky situation, and something which they were trying to do in the earlier period, I think that may be reinstated into the law, because that circular is rescinded because it was, not as per the law. So now they are planning to change the law also. So I think we should wait for the exact amendment in the law and the exact circulars. Only after that you can say it is beneficial
Correct.
or it is against the assessor.
Yeah, but at least removing the first condition, I believe is in the right spirit. That is a condition of there being a pre-agreement. But yes, the second part is linking with the credit note, and most important is this part from the side of the recipient dealer. I believe this is going to be crucial, and I just hope it is towards relief to the taxpayers and the dealers. Any comments by you, Bhaiya, on this?
No, nothing is specific, but yes, I'll only say that first and foremost, we need to wait. Let us see the notification or the amendment proposed. Because what they say and what they do are two different things.
Yes.
Secondly, I don't understand why they are making this so complicated. See, one thing is very clear. There can be two kind of credit notes. One can be with GST, one can be financial credit note. That they also accept. If it is with the GST, then they need to make sure that the corresponding reversal is being done by the recipient so as to reduce the liability. And that corresponding entry, or rather the provision, is already there in section 34. Only thing is that now they also need to bring that provision in section 15. That's what they are intending to do. They need to keep, or they are wanting to have section 34 pari materia with section 15, or rather
Aligned.
to be on the same lines. When it comes to financial credit note, obviously the credit or the liability is not being reduced by the supplier, and therefore there is no question of reversal of the ITC.
Correct.
Where is the question of charging any tax on such discounts or incentives? Because these are the underlying transaction is same, and what he is doing, he is booking those discounts in his books of accounts, but it has nothing to do with GST implication. There is a transaction of 1 lakh rupees. There is a tax liability of 18,000 rupees. You have made the payment of 1,18,000 and you have taken the credit of 18,000 rupees. Now, in future, they are making this transaction of 90,000 rupees. The credit is being reduced by 1,800 rupees. They are issuing a credit note of 1,800 rupees with GST, 10,000 plus 1,800. So obviously, as a recipient, my liability or my reversal has to be there of 1,800. That they need to ascertain and confirm. If that is done, nothing remains. At the same time, when there is a discount of 10,000 rupees, the tax of 18,000 has already been paid. I have already availed the credit of that. 10,000 rupees is my financial transaction on which I am offering a discount. Then where is the question of charging tax on this transaction? Because this is not a standalone transaction of supply. It's merely an accounting entry. So therefore, I'm of the belief that they are trying to complicate rather simplifying it. And circular will come that will certainly complicate these understandings. Otherwise, it is very simple. If it is a financial credit note, no implication of GST. If it is GST credit note, you have to make sure that the recipient reverses it. That's it. Nothing beyond that. मेरे को उससे ज़्यादा कुछ समझ में नहीं आता. And so far as that conditions are concerned, agreement has to be there or agreement is not there. I personally believe that even if there is a mail, even if there is a oral correspondence, because Indian Contract Act allows the oral agreements also. So you cannot say that there was no agreement. If both the parties are agreeing to a particular transaction, you will have to accept that because GST is on a transaction value. You cannot doubt the transaction. So if there is a condition which is laid down in section 15(1), and if those conditions are satisfied, then I am of the view that you cannot challenge that since there was no contract in writing, since the invoices were not having any written contract, therefore we will not offer the discounts. I don't think so. And second, I have not read it again, but what I believe is section 34 has been amended. And it has been amended to make an impact that now there is no linking of invoice with the credit note. Earlier,
Correct.
there used to be the link of invoice with the credit note. So that shows the intention that if there is a contract, obviously they will issue a GST credit note and you need to reverse it. Why you are complicating it further? That is what I would say.
Perfect. Moving ahead, this is again we are going to the excise era, section 4A, MRP based valuation. Maybe this is a measure towards tax evasion in this particular sector. So for pan masala, cigarette, gupta, chewing tobacco, etc. Firstly, they have mentioned that the compensation cess on these goods will continue. And in future, these two things I suppose will happen parallelly. One, compensation cess would be removed, and at the same time, they will reinstate this particular provision whereby the manufacturer would be paying tax on the MRP or the RSP printed on that particular sachet, and that would be at the highest rate, what I believe is 40%. So this is one, I think, straightforward recommendation. Any inputs by anyone on this? Shefali ji, your comments on this, if any?
Let us wait for the notifications.
Any specific pointers? So I believe that two things will happen parallelly. One, the compensation cess, which is right now proposed to be continued only on these goods, that would be removed, and MRP would be brought in. So these two things I think will happen parallelly in future.
Vishal, let me ask one question to myself and to both of you. Can they do this in light of section 15 of the law?
So this will be done by like how we had a 4A in excise. They will have 15A, or they will have a like 15.5.
Therefore, they need
They
to
have done.
amend section 15. They need to amend
Yeah,
section.
obviously.
What they have not proposed it. It is not
Correct.
recommended. They are saying they will do it by way of notification.
So will it be under 15.5?
They cannot. See, if we read section 15.1, it says GST is on a transaction and transaction value. Provided the two persons are not related and the transaction has been entered into on multiple considerations. Agar single consideration hai, if it is purely cash and the people are not related, it's only and only on transaction value. You cannot have a different value. This is how I read section 15.1. And we all know that tax laws has to be read and interpreted strictly. Now they are saying that they will put it retail sale price based method. 15.1 they cannot do it. Because if I'm having a price of, let's say, 500 rupees printed and I'm having a transaction of 300 rupees, can they levy tax on 500 rupees? This is a question which just came to my mind. मैंने उस पर कोई माइंड अप्लाई नहीं किया, जस्ट अभी जब आप बोल रहे थे तो मेरे को ये क्लिक हुआ कि कैन दे डू इट अंडर सेक्शन 15, because for that they will have to go to, see, they are removing compensation cess. It means compensation act has no relevance now.
Right.
Relevance of CGST Act.
Correct.
CGST Act, the valuation section is only 15. Now, when it cannot be classified in 15, then they will have to notify under 15.5 or 15.4. Directly, if they come out with a notification under section 15.5, I am of the view that this may be certainly liable to be challenged. Anyways, just a food for thought, just a big click hua. Maybe I'm wrong, because this is a primary reading that I've done. Abhi aapne dikhaya, isliye maine just padha. Let's say the participants.
Because I believe 15.5 overrides 15.1.
Huh?
15.5 overrides 15.1. Na? So 15.5 is notwithstanding anything.
Absolutely, it overrides 15.5. But you cannot go out of the scheme of the law, no? When the mandate say, or when the statement of object say that the GST has to be on the transaction value, you cannot say that it will be now on the MRP. So that is what I'm pointing out. But obviously they have the powers, they can do it. They will come out with a notification under 15.5 and then they will implement and will challenge. That is our duty to do this. Because statement of object अगर हम पढ़ेंगे तो I personally believe statement of object at one place I've said it is a transaction based supply. Although there are multiple items I personally believe on which they have came out with a notification wherein they are taxing on a particular value. But somebody has not challenged it. But ये जो गुटका और ये सब रहेगा, in that I personally believe it has to be challenged. Anyways, चलिए.
Great. So new perspective for everyone. Even I think if any government official, whenever the person watches this video, should pass it on to the law committee to consider this before they bring any amendment relating to this point. Now, a very big question that is being discussed and that is being solution is being tried to be deciphered is now there is no anti-profiteering implication under GST because of the sunset clause. And government has announced this as a huge rate reduction, projecting it as a big relief to all the taxpayers, to the consumers, and also indirectly to the government. But the question is, if now no matter can be, no one can apply against any company, against any supplier under the anti-profiteering laws, how will the anti-profiteering be implemented on this particular rate reduction? One. Two, if anti-profiteering cannot be implemented, assuming there is no amendment brought into the anti-profiteering provisions, then is there any other law through which this particular rate reduction can be, you can say, regulated by the government to ensure yes, what they proposed and what they are actually having at the back of the mind, which has been announced by even our Honorable Prime Minister on 15th of August, that this would be the biggest double Dhimaka Diwali, and that will happen only if actually the rate reduction reaches to the pockets of the end consumer. So one, if anti-profiteering laws are not there, how this can be actually implemented? Is there any other law through which this can be enforced? Assuming there is no amendment brought, that sunset clause is not removed or is not deferred. If that is done, then fine. Second point to be discussed is how this will impact goods. Now in goods, we categorize it into two categories: MRP goods, non-MRP goods. Now for non-MRP goods, I believe it should be much easier because the company would float the new price list to all the dealers, like let us say for television sets, ACs, washing machines, and it would be easy for them to revise the price list and give them that particular benefit. But when it comes to MRP goods, now this is going to be a very big challenge because even today, the rates are not given in this particular annexures very precisely for each and every HSN. So still there is confusion. Okay. This is what I believe the annexures which are given for rate schedules are very generic. If you look at the actual rate notification and the annexures to that, many industry or many products are still under confusion that whether the benefit of this rate reduction extends to them. So they will get to know only when the actual notifications are out. Now, after that, whatever time they have in hand, maybe 7 days, 10 days, because it has been proposed that these rate change would come into effect from 22nd, which is the start of the Navratra. Now, in this particular case, if the goods are MRP, again, there are a few legal challenges. Wherever the rates are reduced, with again two possibilities. One, either they have been reduced and made zero, so they have been made exempt, or they have been reduced to 5, where the condition is that there will be no ITC. First category is this. In both these categories, what is common? Where it is reduced to 0 or where it is reduced to 5 without ITC. The question is that as a dealer, as a business, how will I identify what should be the proper rate reduction? It cannot be, let us say my rate was 12 and it has been made 5, but you have put a condition that it would be without ITC. I cannot be expected to reduce my MRP exactly by the 7%, which is the rate reduction, because it is coming at some cost of blocking my ITC. So in the MRP category goods, there is a question maybe which industry is looking forward to through the costing mechanism as to where there is a blocking of ITC, how we can find out the commensurate reduction in rate. So I have two questions. One, how this can be implemented legally? How can government enforce, whether through 171 revision or whether through any other law? Two, how this will be computed, especially for MRP goods and especially for those scenarios where ITC will be getting blocked. Inputs from the panelist. Besides this, there are practical challenges that whatever reduction they are proposing, let us say 2 rupees, 10 rupees, 20 rupees, how it will be implemented, that is another challenge, because But I remember a similar thing which happened some time back, maybe during the excise era, where I recall a similar amendment had happened, which led to reduction in the MRP prices. And what I recall, if not very strongly, but some faintly, that new tags were being circulated by the manufacturers. And the tag, I think there was a specific instruction that the tag had to mention that this is the original price and it has been reduced to this price. And that tag was supposed to be pasted on all which are in stock. So for all the pre-manufactured goods which were already having the package with the old MRP, I believe this was one of the mechanisms given. So that is another point. That is the practical part, but we'll be on the legal part first. So two questions. One, it can be legally how and can monitor actually for MRP goods. How identified? Yes, any
Vishal,
inputs?
if you'll ask for my views, I feel, see, there can be two things. The first thing is maybe government want to leave this particular thing to the competitiveness of the market. So as we understand, it's a festival season and people may be comparing the prices because India is, I will not say perfect market, but it's very much
Very
grown kind
price
of
sensitive.
price sensitive, and it's very grown up, and because we have a lot of lower and middle class, so people look at the price of everything. So now again I will say I think we should wait for the final conversion of this provision into the sections and into the circular notifications. Only then we will be able to understand the intention of the government, right? But there can be possibly two intentions only. One is they somehow want to control it. So even if they want to control it, they will have to bring in some change, maybe in anti-profiting provisions, because other than that I don't think there is any provision to control it. And my concern is that even if there is anti-profiteering, even if they extend it or somehow insert something like this, then whether it will ensure the benefit to the taxpayer. Because even if you are collecting something, because when anti-profiteering body is litigating and collecting any amount in form of compensation or whatever, is it also forwarded to the consumers? I don't think so. So I don't think that even having that provision into the law, extending it, is going to benefit the end consumers in any way. So better option will be to leave it to the market, let the corporates decide their price, like instead of controlling them, and in some non-competitive area. So as I'm saying that yes, India is a competitive market, price sensitive market, but yes, I believe some of the areas are not that competitive. So if we are talking about the telecom sectors, there are only two or three players. If we are talking about the airline sector, there are only two players, oligopoly is there, right? So there are some specific sectors which are regulated or controlled sectors where only big players can do something. So in those cases, I think the government may come up with some specific provision for those sectors. This is not what I'm expecting or what I think government will do. This is an ideal situation. I will say
Across the board.
hypothetically an ideal situation. So for those regulated big corporates and the market where there is no such there is no competition kind of thing, they can try to control prices of those industries. But for the other consumer items, the very low priced consumer items like food, fabric, clothes, and all that, I think they can leave it to the manufacturers only. Otherwise,
Market
it will
forces.
only create a mess. It will only create a mess
Correct.
for the businesses, and there will be no real benefit to the end consumer.
Correct. Yes, Avinash Bhaiya, your views on this?
No, see, anti-profiteering is already gone. I think from 1st April 25, it's gone. So 31st March
Yes.
2025 was the last date. But since the concept was there, now the consumers, if they are not happy, they can very well go to the consumer forum or they can go for any other forums which they like. But under GST, I don't think they intend to extend it further, Section 171. Had it been a case that they would have certainly said this during this press release or maybe during this GST Council meeting. So that doesn't seem to be the proposition anymore. But yes, certainly, I'll slightly differ from what Shefali ji is saying. But yes, I'll agree that this has to be left to the manufacturers or to the dealers or the distributors, whether they want to pass on the benefits that they are getting or not. But at the same time, there are certain calculations which needs to be done. Apparently, as you rightly said, that 7% cannot be passed on because they have a blockage of the ITC also, which may be to an extent of 6%, God knows. So then only 1% is what they are saving. So we need to look into those nitty-gritties also. And we have already faced those issues when it came to anti-profiteering cases. When a complaint was filed against the builder or any distributor or any supplier in anti-profiteering measures. So when we calculated, there was no much of the difference. So what I would say is that yes, the intention of the government is to pass on these benefits to the end consumer. And therefore, the industrialists, the business houses, the taxpayers, the persons who are registered or are supplying the goods or services or whatever, must make sure that the intention of the government is met and therefore the benefits are passed on to the end user. At the same time, with due respect, I'll also say that in this country, we may not look into from the perspective of that the government, from the perspective of the end user, and we'll try to tinkle with the costing and the figures, and therefore the rates are going to be more or less same. I don't think it is going to be passed on, to be very honest, unless there is a safeguard, unless there is a strict measure taken by the government officers, which may lead to a lot of harassment to the genuine taxpayers also. But unless that is done, I'm of a view that the benefits will not be passed on to the taxpayers, to the consumers. It will be pocketed by the business houses. This is unfortunate, but this is how it is going to happen. आप सच बोलो तो यही सच है, बाकी कुछ सच नहीं है मेरे हिसाब से. The government officers or the government will have to take some strict actions to identify whether it has been passed or not, and for that they need to have an enabling mechanism which is not there because 171 has already gone. Let us see.
Any other law where through which they can means
No, for that they will have to go for the individual claims under consumer law, maybe the Competition Act.
But under consumer forum also, bhaiya, is there any provision like, let us say, keeping 171 or
No, there
anti-profiteering
is no
aside,
provision.
can I file exactly? So how can I file complaint even under the consumer protection laws that somebody is charging higher price or
What I'll
getting?
What I'll have to do is I'll have to build a case. I'll have to mail to the manufacturer saying that these are the benefits which are given to you. The rates has been slashed, but there is no change in the MRP. So what you have not done this, then they will reply on it, and then that will become a case or a basis on the basis of which you can go to the consumer forum. Now, another thing that you have rightly mentioned, I think about the excise era. Even when GST was implemented, the same thing has happened. The stock which was there, MRP based stocks, then the tagging was changed, or the manufacturers have brought it back to their premises and then they have changed it thoroughly. The same thing is expected to happen again on 22nd of September. So जो हम बोलते हैं ना कि 15 दिन का समय क्यों, why it has been announced today, every business has stopped. This is one of the reasons that they also require time to change the tags or to revise their pricing.
Correct.
Will be applicable from 22nd of September. So that is also one of the ways to look into it. It is not only that the government has announced and now the businesses are blocked. Everybody is waiting for 22nd of September. ऐसा नहीं. They also require time to change their values, change their sales prices, and accordingly throw in the market. So that also is one of the way to look into.
Great. Should we take question answers?
Yes. It's already 11:30.
Yes, ma'am. Can you take the question answers from the chat?
डिटेल વધારે માંગે છે એ લોકો રિટર્ન ભરવામાં પહેલા કેવું પેલું.
Yes, ma'am.
Krishna ji, I think it's not a question, it's a thought of him.
Okay.
Shri Gopal ji's one question is, does printed condition on invoice not suffice for the discount? It is.
Yes, I think he's talking about the condition of agreement, that whether a pre-agreement exists.
Already clarified by Avinash ji. Then the question of Prateek ji is, are they trying to reduce the cases of financial credit note by changes in 15.3b? So I think this point is already discussed. 15.3b we have already discussed. And I will again suggest, let us wait for the exact amendment in the law. Only after that we'll be able to say anything.
Correct.
Vipin Somas, one question is, in accounting, maintain separate ledgers inventory for purchase and sales from 22 September 2025 for future scrutiny purpose from the income tax or GST. In accounting, do we need to maintain separate ledgers inventory for purchases and sales from 22nd of September 2025 for future scrutiny purpose for income tax and GST? I don't think there is any such requirement in law.
I don't believe so. You need to. Yes, yes.
But
There is
for
no
your
requirement to maintain separate.
right. But for your convenience, if you want to do it, you can. But there is no such requirement in law. So. Will Competition Commission of India regulation needs to follow? So Competition Commission.
Where is the question of Competition Commission coming into picture?
Like for price reduction.
I don't think competition law applies to this. But
right.
Whether competition law applies to such a scenario?
Well, I will say.
I don't think
Competition Commission will be applicable when two manufacturers compete with one another. So therefore, in this, I don't think so. A consumer cannot go before the Competition Commission.
My understanding is also so.
Right. And also in Competition Commission, if somebody is selling something for too much of discount or giving it free to the customers, then you can make a complaint that you are destroying the market. Like Jio did in case of Twitter and Jio. Okay. If textile product is
here it is a opposite scenario that people would be. Here it is opposite scenario.
Opposite scenario can also
would be complaining that somebody is charging higher price than the price. So whether this is a appropriate matter for competition law, I don't think so.
So I think, well, I haven't read the competition law from that point of view, but I think if there are only 4 or 5 players in particular industry and all of them are keeping a very high rate, so none of them is giving a discount. Sometimes that may also be that may also happen that they are making a cartel and they are selling it at very high prices. That is also possible. So in that case, I think similar situation can be there.
Right.
If lesser of the players are there and they are not reducing the price.
Correct. Let us take question of Rajesh ji.
Rajesh
So parallelly, we can take questions also.
Vishal ji, Advani, Rajesh Advani.
Haji, sir. Good morning.
I have 2 questions. One is that suppose I am a car dealer and I have some stock left. Now on this stock which is remaining with me, there will be compensation cess. Now, suppose if I take the price, for example, I'll compare this. I'll give you with figures so that you can understand it in a much better fashion. Suppose the price is 1 lakh. So what the government is saying that you will have to sell it 1 lakh plus 40% of it, 1,40,000. Now, I have some stock left with me on which I have paid the compensation cess. Now, that is a cost to me as per what I have read the FAQs and etc. That will not, on the stock which is remaining with me, that compensation cess will not be reimbursed to me. No refund will be granted. This is what I have understood by reading the FAQs. So, 1 lakh plus 22,000, because 28% plus 22%, something of that was the compensation cess. So 1 lakh plus 22,000 compensation cess, that means 1,22,000 is my acquisition cost, you can say. Cost. On that I have to add 40%. Am I correct? So
as of now, yes, sir. But I read somewhere that government is parallelly planning some transition provision for providing relief to this accumulated cess. Now we'll have to wait for, I think, a week to understand what type of transition policy they are making, because this is a challenge raised by many industry forums to the government after this particular announcement. So I believe, sir, but if that transition is not there, or despite of the transition, if some credit remains blocked or which cannot now be utilized, then I'm sure what you are saying should happen. Either the manufacturer or the dealer will absorb some portion in their profits, but some portion they will have to pass on, because this 22% is not a margin in any business. So definitely they
No,
will
no,
not be able to.
that is I wanted to say that recovery of additional what you'd say tax which is there, that is different from recovery of the lost ITC.
Correct, sir. Agreed. So that's what I'm
Because
saying. So that is why,
as
sir,
per
anti-profiteering will be a big question.
they cannot recover it. So they will have to absorb the whole cost.
100%. 100%, sir. So well taken, sir, your example. But I
Okay,
believe there is some transition policy in thought process. So let's see what that transition policy is. Something like Tran 1, Tran 2, they will come out with, so that as you go on selling these cars, you apply under by filing something like Tran 2 and claim the refund. This is what I'm getting to here.
Okay.
If you remember
Second question
Tran
was
2
that
concept, I think the Tran 2 concept will be, yeah.
They will have to bring it because there is so much of stock left.
True.
And
True.
second question is that you were saying competition commission, etc. Can we not put a complaint to the Legal Metrology Act, under the Legal Metrology Act, something of that sort?
Sir, again, what is the locus under the Legal Metrology Act also, sir? Because Legal Metrology Act regulates only the that you are earning more profit by not passing on the rate reduction. I believe there is no locus under the Legal Metrology Act for this type of scenario. Right,
I
sir?
also don't know exactly, but this is what I was thinking that.
This is my understanding. Maybe Avinash Bhaiya can enlighten more.
Yes, I had met Avinash Bhaiya at Pune, and so if he can throw some light on this, I would be really thankful.
Regarding what? The Indian Metrology Act?
Yeah, Legal Metrology.
Legal Metrology Act.
Legal Metrology Act will not be applicable as per me, because Legal Metrology Act does not get any link with the GST law. So as per me, it may not be. It is a consumer locus. Consumer can go before the legal forums, but not under the Legal Metrology Act. This is what I understand.
Perfect. Yes,
Sir.
Girish Bhai.
Yeah, thank you so much, first of all, for the opportunity. I have a question to ask, but before that, there was some reference to Competition Commission of India, and I believe that if we go to the original section 171 subsection 2, it says that the central government can constitute a separate authority or empower an existing authority to examine these anti-profiteering provisions. And if I remember it correctly, in the year 2022 or 23, I don't remember exactly, they had issued a notification to empower the Competition Commission to examine the anti-profiteering matters. So probably that is the reference of the question that somebody asked in the messages. That is what. Secondly, this intermediary changes that are proposed to be come into the picture. I was wondering what will happen to the existing matters which are into litigation, because we have so many matters wherein the refunds have been rejected, treating the exporters as intermediary, and we are probably at the appeal level or at the waiting for the tribunals to operate, and we are waiting for this amendment as well. So will it make any difference having this amendment prospective or retrospective? That is a question that I have.
Okay, so firstly, I believe that it won't be retrospective, it will be prospective only. The only thing that we need to see that whether they will give that particular buzzing phrase as is, where is as a rider. If that comes as a rider along with this, then I believe you all will get relief. But if that phrase is not coming, then I think the old challenges, firstly about the constitutional validity, whether 13.8 is constitutionally valid, and second, that which act applies in this particular case, whether a state act can apply to this type of a transaction as per the constitution. So I think these challenges can definitely be raised at higher forums challenging this particular law. But my understanding is the amendment will not be retrospective. At least till now, I have not seen any favorable amendments coming retrospective. All amendments that have been made retrospective have been favoring the government or the law, but not to the taxpayers. So let's see. Any inputs, Avinash Bhai, on this? That what will be the fate of the existing cases?
You yourself have mentioned, na, as is where is basis.
Yeah,
So
but that if they provide so, na? If they don't provide, then
if they don't provide, then whatever will be the fate, it will be the fate. We'll have to keep on fighting for it. See, if it is in litigation, where is the question of not fighting for it? We'll continue fighting for it, and we'll have to link it with the current present position that the intention of the government was always to make it in this fashion. So therefore, the courts will agree. Let us
okay.
first let us see the how the notification comes or how the amendment is there. What are the wordings, whether it is retrospective, prospective, in spite of we gambling into it. Yes, I do agree that primarily it has to be prospective only, because if it comes retrospectively, the entire gamut will change and a lot of hue and cry will be there, because all those litigations will be in favor of the will be declared to be in favor of the taxpayers, which the government will not never want.
And also there will be another challenge that for import of services which have not been taxed under RCM, now if it is retrospective, that will trigger the liability for importers.
Correct.
And that will be another constitutional challenge, that can you make it taxable in such a fashion? When I imported the service, the place of supply was outside India, so I did not pay the tax under RCM. And now by making the retrospective, you are bringing a charge to a old transaction. So that will be another challenge. So
That cannot be.
yes, so I personally believe that it will not be retrospective, but still, let's see whether as is where is comes. If it comes, then I think that should be a relief to industry. If not, then I think the litigation, which is presently the grounds, I think that should be contested further. Yes, ma'am, you can take further questions if there are any.
Oh, can we take the last question now?
Yes, ma'am.
So there is one question of Ajay Raj Singhal ji. In new scenario, is still inverted rated refund eligible to polyester yarn manufacturer case of maximum raw material at 18% and yarn at 5%?
Ajay ji, I have not gone to the minute HSN.
No, the query is
If
that
18 and 5 continues.
Yes, go ahead.
So if the if what you are saying is still going to happen post the rate change, then there is, see, inverted rate structure refund has not been removed, but now the government is saying that there won't be inversion because they are trying to bring the entire industry into one tax bracket. But if still, despite of these rate changes, if 18 and 5 continues, then I think there is no harm in getting the inverted refunds. Yes,
See, one
Bhaiya,
thing
you were
is very
saying
clear.
something.
So far as inward duty is concerned, no. So people generally have a belief that if your major input and your output are of same rates, then inverted is not applicable. As per me, that is not the right way of interpreting any input. Even if that input component is of 0.1% in your entire purchases, then also you are falling into the inverted rate structure and you can very well claim that refund. So if there are inputs of 18%, still you continue with that inverted duty structure and you can claim refund of the additional accumulated credits as per the formula which is given in the law.
Yes. Should we take?
Some minor questions also.
Hello?
Shall we take all?
Hello.
Yes, I will take one question of Yash Panchalji. Yes, Yash.
Sir, my question is कि
Yash
tobacco,
Panchalji, you are unmuted.
हाँ जी सर, टबेको के ऊपर अभी जो सेस लग रहा है वो सपोज 22 तारीख के बाद जो लोग लोन रीपेमेंट कर देंगे उसका 40% लगेगा और जो लोग रीपेमेंट नहीं करेंगे उसका एज इट इज रहेगा। तो वो जो लोन रीपेमेंट की जो बात कर रहे हैं वो एग्जैक्टली कौन से लोन रीपेमेंट की बात कर रहे हैं?
I think Avinash Bhaiya is the best person to answer this.
No, you answer it.
See, sir, now because of the these compensation cess removal, many states are incurring a loss, and also the government was not having sufficient collection to repay to the states to compensate the loss. Now, for that, the government had raised certain loans, the states had raised certain loans. So they are talking about those loans, that until those loans, along with the interest, are repaid, they will continue the compensation cess on those specified products. Yes. So those are the loans they are talking about, loans and interest.
Okay.
Okay. Thank
So
you.
shall we conclude it now?
Yes. Thank you.
Yeah.
I think we should.
Okay, let us conclude it.
So Shefali ji, you can conclude.
So this was our discussion about the non-tax rate changes, and we have covered the various aspects of it, the intermediary, the important change in section 15. And I will say the crux was that we should wait for the exact, incorporation of those proposals into the law, and only after that it will be good for us to, conclude our thought process on these things. And also, as we all know, that GST Tribunal is going to kick off anytime in this year. So for that, we have bring out a course on the GST Appellate Tribunal, the most practical course basically, wherein you will be able to get the very important practical insights from Avinash ji. So he will be the mentor for this particular course, and all of you can can get your enrollment for the course. The link for the course will be sharing in the chat box. So if you wait for a minute, I'll be able to share the link in the chat box, or you can contact any of our partners if you want to enroll for this particular course. So
And most important point, this is not going to be a course reiterating the theory part or the rules part. For that, you have many other YouTube free videos or other channels. We are going to dwell with on the most important aspect, which is the entire approach. So it starts from when a case is coming to how to decide what would be the course, that is whether you should prefer an appeal or you should prefer an writ, and what would be the stages or how you are expecting that the case would progress, because all these things many times the client should like to know upfront. So this course is mainly designed to give you that insight. Plus, as we proceed in the 4-day session, we are going to discuss upon the tools, that is how to draft a good strong appeal, what could be your strong grounds, on what grounds to press and what grounds not to press. These are the different things that are being taken care of. So it is not a course reiterating the rules or the new GST 80 rules that will automatically be covered wherever required. But this course is more on giving the practical approach of litigation. So I invite you all for this beautifully designed course. And yes, those who all have the links may continue registering. In fact, till yesterday evening, we had around 90% registrations of our expectation done. So the remaining 10%, you all can do it next few days. And if anybody has any questions, you can connect to any one of us and we will be pleased to reply back. So with this, we close today's session, and thank you all the panelists, and thank you all the participants for being present and always sharing your learned inputs on the aspects and enriching everyone. Thank you all. Thank you. Thank you very much.
Thank you.